Hi again, so my name is René H. Jurgensen, and in this video I'm going to look at how to invest in crypto. I'm going to use a PowerPoint and I'm going to go through 7 points. I've made 7 key steps that I strongly believe are going to bring you success in your crypto investing, and I'm using a PowerPoint here. It's going to be a little bit of a longer video, and I'm using a PowerPoint. I'm going through each step one at a time and actually kind of really trying to explain in depth really the critical steps to understand here, because it sounds simple, but it takes a little bit more of an afterthought. So I really hope you're going to stick with me from the beginning to the end so you really understand how to become successful in your crypto investing. So here you see the steps. Step number 1 is really to know your risk, what's your risk tolerance, and then you also need to know your strategy. And then you also need to understand the crypto market, which is really ruled by crypto cycles. And once you understand that, you'll understand the concept of buying the dip, why that is a very popular strategy and profitable strategy. And then we'll look at narratives and trends within crypto. And then we'll also look at how to take profits, and then finally how to exit, how to get out, because that is really the key. If you don't take your profits, you don't figure out how to exit, you will end up with nothing. And that's not the goal here. The goal here is to become rich from crypto investing. Okay, so let's look at it. First, let's look at the first thing here. The first slide, I just want to look at, why should we invest in crypto? So I think this one kind of, you have a total asset performance last year of 2023, and it's pretty obvious if you are, forget about commodities bonds, but if you look at cash, you have a 0% gain. But if we look at inflation, actually when we add the money printing to the actual inflation, we're looking at about 15% inflation a year. So you actually, in order to have any gains and grow your wealth, you need to have, even gold, 12% is not enough. You need a minimum of 15% gain a year in order to stay ahead of the game. And that means you need to look at stocks, overall stocks. And of course, we can see that the tech stocks have done well. We got the big 7 that are doing well. But then much better even is crypto itself. Obviously, crypto itself, all coins can go up and down. And so the gains are here projected as smaller. And then you have with 116% crypto overall, with the right management, you can do better. But also then we see crypto, the king of crypto, Bitcoin. If you just stay with Bitcoin year over year, last year it was 156%. I think if you look at the 10-year average, it's about 140% a year over 10 years average. So crypto and Bitcoin, it is really the most profitable sector right now. And that's how we always see when there's a new change, when we went from, into the industrial age, and when the computer online, if you were first online, had a business online, so forth. Whenever you're first mover, you have big gains. And that's really where we are in the crypto market right now. So let's be totally honest about it. 80% of people, they lose money in crypto investing. And that's really, people won't brag about it, but this is really the reality. Only a small percentage, I would say probably 10%, really get the game, and they're really able to win and really get massive gains from crypto, which is really possible. And here's one of my favorite quotes. I forget who the big investor who said, I think actually it might have been, it could have been Warren Buffett, I'm not sure, but there are 2 kinds of people who lose money. Those who know nothing and those who know everything. And this is really one of my favorite quotes, because it really tells us that we need to be humble. We need to, obviously we need to educate ourselves and know as much as possible, but we also need to be humble and not just think we know everything and just kind of go blind over the cliff, right? We really have to treat investing with a level of humility. And that is also, that's the principle of wisdom. Critical thinking is really starting from a basis that I really know nothing, but I'd like to find out, right? That is really the openness we need to have. And that applies to investing as well. And again, here I put up just a little bit of a hint here, the 10,000 hour rule, which is about 4 years of learning. I think that's about right. I've spent 5-6 years now in the space, and yes, it took me about 3 to 4 years till I finally got it. So 10,000 hours. Maybe Elon Musk, he doesn't sleep, so maybe he can do it in 2 years. But for the rest of it, it's about 3 to 4 years to finally get it. So that's the time you need to be humble. You need to be very humble the first 2-3 years, because that's also where you can be open to scams and do a lot of mistakes. So treat it with a level of respect, and slowly move forward. But I do think that I have laid out for you in this video some of the most important steps that's actually going to get you close to being successful, right? If you really get each step in depth, you're going to be successful. I pretty much guarantee it. And I'm also here to help you. I can assist you. I can manage your assets for you. I'm also available to questions and answers. You can always reach out. So let's start with number one. Number one is really your risk tolerance. You need to know yourself. Like, where are you? What is your current age? Are you in your 40s? Yes, you have life ahead of you. So let's move the dot to red, high risk. Are you in your 60s? Are you thinking about retirement? Then you got to moderate your risk, right? This is really important thing to understand, because crypto can be very risky, and you need to really know where are you in your circle here. What type of investor are you? That really depends on where you are in your life, what's your financial situation, how much money can you afford to lose. And then, obviously here we're talking about crypto. That's the space, right? You need to load your time horizon, and really what is the purpose of your investment. I get to that later, where it's really, we talk about your exit strategy, right? Why do you want to invest in crypto? What is your purpose? What is the exit strategy that you want? What do you want out of it, right? That's very important too when it comes down to your risk. And then also we need to look at different times. We can be defensive. This is the same principle as regular investing. Really, crypto investing, because it's based on human psychology, is really not that different from regular investing, stocks, bond, and so forth. It's more technical. It can be more tricky because it's very technical, but it's driven. All markets are driven by human psychology. And therefore, we can apply the same rules that we can to regular investing. With the same rules and principles, we can apply them here to crypto investing. And here, if you might have heard of 2 points, you can be defensive and you can be aggressive, right? So that really depends on where are you? Are you young? Or you have a lot of money? You can risk. You can afford to lose the money. Then you can be more aggressive. If you're more thinking about retirement, you can't lose your money. Then you have to be more defensive, right? So this is really a question of where are you on this scale. That's something you have to answer yourself, or you can explain that to me and we can find out strategy together. And then, of course, that comes down to, are you offensive or defensive, right? So offense is really the aggression, and that's something I would recommend in a bear market. Actually, I believe that's the time to be offensive, and that way we can cash out at the top. And once we get close to the top, we actually need to be more defensive and be careful that we don't lose all our gains, right? So these are important principles here as well in crypto investing. Also, of course, scams, hacking. This is actually a funny episode that was actually on the day everybody expected the EFTs to be approved by the SEC. Their account got hacked, and somebody actually leaked the information that they were approved a day before they actually were approved. So even the SEC, who was supposed to be combating insider and misinformation, they can succumb to hacks. So this really explains to you that because the space is online, it's technical, you have a lot of people that are familiar with IT, and some of them are hackers, and this is a very profitable space. So what you can see here, one survey found that 30%, 1 in 3 of crypto owners in the US, they've actually been a victim to crypto theft. So 30%, almost 1 in 3, right? On average, people have lost almost 100,000. And then you also have, we also have that only 34% they use multi-factor authentication. Google Authenticator right now is a very good one. It changes every 30 seconds. That's a very good savior. But you really have to update your security all the time to stay ahead. And even what's better is what we can see here, only 15% use offline or cold wallets. And that's actually what I personally use. I use that for my business, for my clients as well, because this is really the way to go. We call it cold storage or offline storage. That's really your highest level of security, because it cannot be accessed from online. If you're making any transfer or anything from your holding, there has to be a code that is done offline, and therefore it cannot be hacked and it cannot be accessed through online, because you're keeping it cold, you're keeping it offline, and therefore you're keeping it out of reach from hackers and people that would scam you otherwise, right? And this is really something you have to, especially when you're just new in the space. My first 2 years, I fell into a lot of scams as well, and that's your learning curve. That's your 10,000 hours. Your 5,000 hours are going to be filled with scams and people trying to, because you're new, right? You're learning, so you don't know, right? So that's really what this is about. Okay, so let's look at number 2 here, really is strategy. What is your strategy? So your goal, I think it starts with your goal. What is your goal of investing? Why are you investing? Is this for retirement? Are you younger? Do you want to buy a yard? Or what's the purpose of it? What do you want to do with the money, right? And that then becomes your strategy, right? Because depending on how large or small your goal is, then your strategy has to be adapted to that. And so let's start with the obvious here. This is what most people don't know. They think trading, obviously trading is very exciting because you're in the moment, it's happening all the time. But actually studies show that 97% of people who do day trading in crypto, they lose their money. And this is really the quote I started with, those who know nothing and those who know everything, right? That's really, I have a few friends that are traders and I keep telling them, you got to get over this. You got to grow up, right? Because it's really, trading is really, if you think you're going to be in the top 3% that can beat the market, and this, by the way, is the same in the stock market. Traders lose. Over time, traders lose. There's data of both in the stock market and in crypto trading. Day traders lose. There's only 1 or 2% that actually can maintain winning on a continuous basis. It's only 1 or 2%. And are you that 1 or 2%? Probably very likely. And that is why I here again bring up the quote, and those who know everything, right? So trading, I do not recommend it. You are not in that top 3%, that's for sure. So better would be to HODL. We say just hold it and just hold on to it. If you're into Bitcoin and you just ride it out year by year, you're guaranteed to have, right now the average is 140% a year, so that's not bad. In another 10%, in another 10 years, 10x times 140%, you're going to do well, right? So just holding the crypto is actually very profitable. And that's also where we also have the same popular trading strategy from stocks and everything else, which is called dollar cost average. So basically you can do, each month you put an amount aside. You can also do a monthly payment plan. We can do that for you here at Coinvans as well. So basically each month you have an amount and you invest that on a continuous basis. So no matter if the stock market, if the crypto market goes up and down, you still keep putting in keep putting in money, which means that over time, you're going to increase your investment, and over time you're going to win as well. You're actually going to, even if the market is down and you keep investing, it's going to be cheaper. When it's up, it's going to be more expensive, but over time you're going to win. So that is really, if you're doing this yourself and you want an easy strategy, do dollar cost average instead of trading. I really do not recommend trading. It is not a winning game. And then really the thing I promote, and I really think once you understand crypto investing, it's really about buying the dip. But there's a lot of information out there. There's people that tell you on TV, don't buy the dip. Obviously, it depends on your strategy. If you're doing dollar cost average, then buying the dip doesn't make sense, right? Obviously, it depends on your strategy, whether this makes sense. But really, if you really want to understand crypto investing, it really comes down to pretty much the same core principles as investing anything else in stock, anything else. And that's really understanding the market cycle, the crypto market cycle. Okay, so obviously crypto investing is different. It's much more technical. It's more difficult. Having your own wallet, being a different exchange is very technical. Obviously, investing in an ETF is going to be a lot easier. But if you're going deeper into it, investing in other cryptos, not just what the ETFs provide, then it's going to be more technical. But again, because it's driven by human psychology and emotion, it is governed by the same principles. And that's really what you can see here for some of the masters. Howard Marks here, who I think it was Warren Buffett who told him to write his book, which is very famous. And it really comes down to understanding the market cycles. That is really, in my mind, also from the crypto market perspective, if you understand the market cycles, then you become successful in crypto investing, because that's really when you are mastering and following the cycles instead of being a slave and just being bumped around and following what everybody else says, right? So this, of course, comes down to following the market cycles, and buying the dip really comes down to a very easy principle, very simple strategy, which is buy low and sell high. So very simple strategy, but I put here in parentheses that it's a little bit hard to execute. It's a simple strategy, but not that easy to execute. It really takes. You have to follow the market, you have to have market insight, and you need to understand all the steps here that I'm laying forward for you here. So, crypto market cycles. First, let's just talk about the macro cycles. We say they're about 10 years, 8 to 10 years usually is a market cycle. And usually we will see booms. They will last for about 7 to 10 years. And then we'll have a correction, which is about 2 to 3 years. So we just had a correction. We're in 24 right now, and we're just coming out of a correction. That correction started in 21. So it's been about the 2 to 3 years, as we say here. And that means that now we are actually waiting for the Fed to increase, to cut rates again. There's talk in the US the Fed might do that this summer in July, August. We don't know. There's talk, do we need it, do we not? But it is, it's election year. So we probably will have rate cuts end of this year, and that means then that we're then going to go into another bull market, and the bull market then again an upcycle here lasts about the 7 to 10 years, and that's really kind of based on, this is Ray Dalio's this is his growth over time, and really what we have a little swings. This is where most people get caught, but if we understand the main cycle, how this cycle goes over 10 to 12 years. We have a boom, 7 to 10 years, and then we have a correction, 2 to 3 years. Once we understand that, we can actually use the market to our advantage, and that's really where the gains are. But crypto is different. So crypto is a 4-year cycle, and it's actually because of what we call a halving, which is when the crypto miners, there are benefits. So they get paid. When you're mining Bitcoin, you get paid in Bitcoin, and this payout is half. It's cut in half every 4 years, and that also then affects the supply, because a lot of these payments in Bitcoin to the miners is then going to be sold on the market, and if this supply from the miners is cut in half, then also part of the supply, the supply is much larger now, but part of the supply is cut in half, and when you lower the supply, then of course you will have a market upswing, and that's why the crypto market, which is ruled by the halving every 4 years, is a 4-year cycle. So basically what we have in the crypto cycle is we have a 1-year correction instead of the macro, which is 2 to 3 years. We'll have a 1-year correction, and then we'll have a 3-year. The first part is really kind of, we would call it the accumulation, and then we go into a bull market usually. So there will be about 1 to 3 years is a 1 year of accumulation, and then we'll have 2 years of a bull market, which is very normal. So you can see here that 3 years accumulation / bull market, and then 1 year correction, right? So the last correction we had was in October 21. And sorry, here there's a mistake. This should have been to October 22, where we had a new all-time low for Bitcoin. This is where Bitcoin was at about 15,800 per Bitcoin. This was a good time to buy, where I did, including myself, I bought, and I also bought other goodies such as Solana as $8. This was a really good time to, all-time lows is really the right time to buy. That's really when you start your accumulation. So based on that, we kind of we kind of would think that from 22, again here, sorry, I put a 21, should have been a 22. But so the next correction is likely, if you take October 22 plus 3 years, we're going to be in October 25. That would be kind of, if we follow the normal cycle, that will be the next top of the crypto market would be in October 25, if everything goes in a normal cycle. And that's something I'll talk about later, because right now the cycle is changing. We have a new all-time high before the halving. We just had that. So things are changing, but these are some of the core principles that we need to be aware of. And therefore also what we have is, we have within crypto, we have 2 crypto cycles within a macro cycle. So the macro cycle is 7 to 10 years, but the crypto is 4 years. That means we can actually have 2 crypto cycles within a full macro cycle. That's something to think about. That means we'll actually have 2 bull runs within a macro cycle, which is quite interesting. It gives us 2 opportunities to make a lot of cash here. And so let's go back to really the core strategy, which is buy the dip. We could call it buy low and sell high, which is kind of, this is how most business works. This is, if you're in any kind of business, you want to have a cheap cost of product and a high sales price, and that way you make a profit. So this is the same core principle in business and investing. And here we can actually see why this is so important here. We have here, this is from the 2021 last bull market. If you see, if you're entering here in mid market, this is usually where you probably are gonna hear my video mid market or maybe at the top of the market, because what happens is that people are busy, they go about their lives, and they might have heard a little bit about crypto here and there, but they don't really pay attention, right? This is really the art of communication. We need the same message up to 7 times before it penetrates, and that's usually what happens, right? People don't enter the majority, the crowd don't enter the crypto market before it's mid or really at the final top of the market. And that's also when you know when to get out. But you see here, if you enter mid market, if you are kind of paying attention and you enter mid market, you will have a 800%, so you'll have an 8x from mid market to the top. But if you did and do what I just mentioned, which is buying Bitcoin at all-time lows, which was in October 22, you could buy it at 15,800. You could buy Solana at $8. So this is really the whole idea of buying the dip, is to buy when it's at the lowest point. All-time lows is really the cheapest point in the market, and there you can see if you're able to do that, this is based on data, you're able to get a 4,000% return, which is a 40x. 40x is quite good. I would say that is an average for the total market. So if you're actually keeping your powder dry, if you're waiting and you go in at all-time lows, you're able to get a 40x out of your investment. Depending on, of course, that you're able to predict the top of the market, because that is, of course, buy low, sell high. Of course, that then depends on whether you're able to predict when the high is. That is really actually the key challenge in crypto investing. And here we can see some actual numbers. We can see Gala Games. It went up 32,000%, so 32x. You've got Axie Infinity here, 18x. You've got Sandbox, 16x. You've got Polygon, did a 14x. You've got Phantom, did 13x. You've got Terra Luna here, did 15,000, so 15x. And another 11x here. Solana did 11x. It's actually done more in this season. It's going to go even higher. It is really it's following. I'll talk about that later, but it's following Ethereum. And then you continue down here, right? So this is really the actual returns. So this is also why I'm promoting not just Bitcoin, but also actual crypto investing in altcoins, new layer ones, etc. Because this is really where we see the big gains. If you play the crypto coin market correctly, you can actually outperform Bitcoin, which is, you saw last year, it's 153%, 140 on average. You can actually outperform that. You can actually get a 20, 30, or even a 40x from your return here if you invest and you do it the right way. And this is also something I can help you with, and that's what we can do here at Coinvance, help you get these returns, because this is really where you outperform Bitcoin and anything else in the market. And so how do we predict the market cycle? This is Plan B, a very famous crypto investor. He has his stock to flow model, which has actually been correct year over year. You can see it goes back all the way to 2011. This guy really understands. He comes from regular investing, and he has turned his knowledge, insight into crypto, and he's actually figured out a way to predict the market. And you can see here in his chart, he actually tells us we've just started a bull market. So in 2024, we've just started the bull market. But he also tells us accumulation. So this is accumulation is really when we've hit all-time low. That's when you accumulate, right? So this is what we talked about. Bitcoin at 15,800, Solana at $8. This is your accumulation here. And then he also tells us once we go really high, we go into distribution. Once we've hit an all-time high, then we go into distribution. So this is when we sell, and then we sell. There's a little bit of an extra top here on the last bull run. It was a W shaped. And then when we go into the bear market here, this is when we lay low and keep the powder dry. So this is kind of how we predict the market cycles. But then there's also another thing, which is really what we call the alt season. So what most people do is everybody comes in, they invest in Bitcoin, and once they put all their money into Bitcoin and Bitcoin goes to new all-time highs, then people look at those gains and put more money in, and then they look to Ethereum, which is really the second largest crypto. And I guess today you will see some of those flows also go to Solana, which is now, it's actually competing with Ethereum to be number 2, but right now it's still number 3. And so this is what we see. So the money flow goes from Bitcoin into Ethereum, now Solana, and then into other large caps. So you would have Avalanche, you'll have Linked, you will have a lot of the large, we call them blue chip large caps, altcoins, where the money then goes in, and then finally now people are really getting, you could say, they're getting a little bit inspired to make greater gains, and it goes into what we call the altcoin season. So this is really where we have mid to low cap altcoins, and that's where we find the biggest gains. We might see Bitcoin do a 5x in this cycle, but in some of the altcoins you can actually get 50 to 100x. And obviously if you have a portfolio with 5-10 of these that are doing 50x, or a couple of them doing 100x, then all over your portfolio is going to do very well, right? So this is really kind of the goal, understanding the flow here of how crypto goes from Bitcoin into Ethereum, Solana, large caps, and then we go down into the mid and smaller caps, and that's really where the huge gains are. And that's really what everybody's waiting for. That's what my portfolios are set up for, me personally, but also this is what I help clients do, to set up a fund that is going to target the bigger gains. And that's something we can decide on together. What is really the strategy? What is the gain that you would like to get out from your investments? And then let's look at crypto narratives, number 5 here. So that's really another thing that's very important to understand, is that when we go into alt season, then we should try to predict because there are thousands of crypto coins, altcoins, and then where they're going to go. And we can actually see here that last year the top crypto narratives were artificial intelligence and then GameFi. So let's just stick with those two, because I think that's kind of enough, right? Obviously we've had ChatGPT, everybody's talking about AI, is it going to take over humanity? And we've had Google Gemini's flop, we've had everything is AI in the news. Obviously that narrative is going to spill over into crypto, and that's why you see artificial intelligence as being the top one here. And these are actually also the 2 top narratives that I'm heavily and that I've got our funds in and that I recommend to clients, is really these 2 top narratives, which is really going to be the future trend, where we're going to see some really huge return. We're going to see the 50 to 100x return in this coming bull market. Those are going to be from those 2 top narratives, as we can see here. Then obviously there is the other thing. It's like, how do you identify a good crypto project? Okay, you can follow the narratives. Okay, let's just buy any small cap AI narrative. That might not be a bad strategy, and certainly that's something I do myself. I do look for small up and coming AI narratives that have a good use case. But it's really altcoin investing is really a lot like investing in a startup. So everything is a startup, right? We've got Bitcoin, and then right now we got Ethereum and Solana competing to be the main chain. Obviously Solana is a lot faster, which speaks to it. It's cheaper. Ethereum now we're trying to improve it and make it better, but there's a competition. But obviously in the future, in 10 years, it's probably going to be none of those 2. It's going to be something else, right? So we want to be thinking about what are the startups that's going to be the possible leader in the space. That's really what it's like. It's just like if you're investing in a new startup like Google or Facebook or anything early, this is the same thing that's going on right now. We're trying to predict who are the Googles and Facebooks of the crypto sphere going to be in the future, and that's what we're trying to invest in, right? That's what we're doing here. Obviously, you also have to be careful when you are investing, because there are something called pump and dump. So these can be YouTube influencers that are pumping something and then they're dumping it because they hold themselves. It can also be the news cycle. A lot of PR goes to a shit coin. They're just pumping it because they've got a lot of money. They got some VCs, they got a lot of money, and they're throwing in there, but it's really not a good project, right? So pump and dump is something you got to be very mindful of, because that's really when you can lose a lot. Actually, the best way to look at a good, stable, solid project is to see a progressive increase over time. If it's a radical, if it's a what we call a God candle, then it's probably a pump, and then there's going to be a dump, right? So these are things you need to recognize in the market when you invest. And of course, then what we're looking for is the 50x crypto portfolio. That is obviously the ultimate goal. That is really where the big gains are. So this is really kind of you could say the goal of altcoin, of crypto coin investing, if we look away from just Bitcoin. And what we can see over time is really that Ethereum is following Bitcoin. It's on the same chart. And then what's very interesting is that Solana follows Ethereum. Obviously, that is the reason I bought Solana at $8, because as we can now see today, it really follows Ethereum. It is actually going to be competing with Ethereum, but it's following it in its tracks. So then once we know that each major large cap coin is actually following their leader, then really the question becomes is, if Solana follows Ethereum, then who is the next Solana? And there are some projects right now. We have Aptos, Sui, and Sei, all projects that I'm in because they're all promising. But okay, it's it's a hit and miss. You've got to spread your portfolio because there's no way of really knowing. You can look into the project and you can see what are the reviews, what are people saying, how is this project panning out. But then also there are improvements. Sei is very promising. They're actually implementing more improvements, and they have we could say promised that they're actually going to be the fastest layer one out there. They're actually going to be faster than Solana, and that's something that remains to be seen. But obviously, if that is true, and you bought it at, I bought it at 11 cents. If you bought Sei at 11 cents, you hold on to it, and it turns out to be the fastest chain ever, and it gains in popularity. Yeah, then you have a winner, right? This is really what it's about. This is really investing in startups. This is what we're doing here. This is the same thing for crypto, what we're doing here. And then also there are this is actually Casper. I bought Casper at 4 cents, then at 9. I really doubled down at 9 cents. This is a coin that I think it might be able to go to $2, $3, $4, $5 in this market, but this is a coin that I've actually put into cold storage in large numbers, because this is a coin that I believe in the next bull market, 28, this coin is gonna be a top 20 coin. It is, the developers are the same developers behind Bitcoin itself, and what they're really trying to do with this project, they're really trying to improve Bitcoin, or actually create what some believe Bitcoin should have been, could have been, and they're trying to improve Bitcoin. So this is a very interesting project, and that's really what it's about. It's about predicting what are the real promising projects. Get in and buy them early so you get them at a good price, and then you ride it all the way up. That's the idea here. So now let's talk about taking profits, because if you've done everything right so far in the first 5 steps, if you understood everything, you did everything right, you're gonna be taking profits, right? Because there's no point in just riding it all the way to the top, and then when you get to the top of the market, you don't sell, and then you ride all the way down. The further you go down, the harder it is to sell, because the more money you've lost, right? And what happens, a lot of altcoins will actually disappear. A lot of altcoins will go down 90, 95%. Some of them will go to 0, and some of them will not come back in the next bull cycle. So that's why you can't actually sit with a large portfolio of losers that are gone down 90, 95%, and some of them will never come back. So that means you actually lost the money. So taking profits is actually really important, otherwise you get nothing, right? And obviously here you have a little bit of here what we can do. We can do stop loss order on some exchanges. You can do that to avoid your loss. There's different strategies you can do, but what I really want to talk about here is that understanding the market cycle and understanding the psychology is really where I think this is really where you can master the market. That's what I aim to do. That's what I'm doing. And I have here now, this is the quote from Warren Buffett, which is that what the wise does in the beginning, the fool does at the end. And this is really when we're talking about buying the dip. We're buying these crypto projects. We're buying, we bought Bitcoin at 15,800, Solana at $8, Sei at 9 cents, Casper at 4 cents. You know, getting in early is really getting in here where the market is down. So this is where we were a year ago. Everybody was in disbelief. Everybody was saying that crypto was over. It was finished. I mean, who did we not hear say that? I mean, Okay, so Larry Finch, BlackRock has turned. He's now a Bitcoiner, and also we have Jamie Dimon, who is now slowly turning. But there's a lot of pessimism out there, and this is really also what I think Warren Buffett says that famously as well. That when there's blood in the streets, you should be buying and you should be greedy. But when there's greed, you should be fearful, right? So this is really when nobody believes, when crypto is dead, nobody believes in it, the media is trashing it, everybody's trashing it, that's actually when you need to buy. And then, as not to be the fool in the end, when this thing goes into euphoria, so this is really where the fool enters the market, they will come in at the top, and that's actually when we're cashing out. Because now we know what's going to happen. Once we get up to this point where everybody's talking about, the media is euphoric, your friends, everybody's euphoric about how high crypto is going, that's the time to be fearful, because now everybody's greedy. So this is really understanding the market psychology is really going to help us be successful in crypto investing as well. And we do have projections. So we do have projections that try to help us understand exactly how long is the bull market going to be. That's one of the key things, and there's a lot of graphs out there, there's a lot of information, and what I really kind of wanted to say first is that what we have this is a normal bull run. I think this is 21. What we have is, it is normal to get market corrections. So here you can see 38%, 38, 33, 38, 36, 29. So you have 6 corrections all the way to the top. So we're not panicking, we're understanding that market corrections are normal and they're necessary. To flush out the short selling and everything else, which by the way is a bad idea if you're going against crypto in a bull market. But these are things we need to understand. So we need to hold our breath, and we need to figure out how do we get to the top, how do we predict the top at the right moment, right? And here this really comes back again to stock to flow. Plan B he's one of the oracles out there. It's definitely one I recommend his advice. He will actually tell us when we go from bull market. So this is top of the bull market, and then he will put us into distribution. So distribution is when we need to sell and distribute. And he will actually put the dots when he believes the right time is. So this is one person I recommend following, Plan B. He's on Twitter as well. And then, of course, this cycle, it's a big question. What kind of cycle are we going to get this time? You will probably have heard the idea of a super cycle. Usually the new all-time high for Bitcoin will happen after the halving. That's usually when the bull market starts, and that's when we have a new all-time high. But this year, in 2024, we had a new all-time high in March, and the halving is not before April. So we had more than 5-6 weeks before the actual halving, we had a new all-time high. So what does that mean? Obviously, we had the massive inflows from the ETFs that were improved on January 12, and we've had massive inflows. All of a sudden, it's not just a 10-20% of the population, the computer people and nerds that have access to it. It's like everybody, the regular investor. So now we're becoming mass market. So what is that? What does that do to the cycle? And I put a question mark because, again, the ones who lose money are the ones who know nothing, or the ones who know everything, because really nobody really knows what this cycle is going to be. And that's why I put this one. You might have heard around, it's everywhere, YouTube, on the internet, that we're in a super cycle and Bitcoin is going to go to 1 million. And of course, what you hear people say is that this time it's different. I put a smiley because that is definitely, when somebody tells me this time is different, I'm gonna run away scared, because this is really the certainty that's gonna get you in trouble, right? So we really have to be humble here. We really don't know. We really don't know what this cycle is gonna be. And so what we need to come up with is a profit taking strategy. And I think this strategy needs to evolve with what's happening in the market, but you need to have some kind of idea of how you're going to take your profits. And so basically what I could suggest is one, profit-taking strategy, which means that if we have a cycle that we don't know how it's going to pan out, it's going to be a super cycle, it's going to be a normal cycle, it could also be a shorter cycle. So basically, because we've had a new all-time high before the halving, we could also maybe see the end of the cycle that has been moved forward as well. That's why some people believe we have a smaller chance, maybe 30, 25%, 30 chance of a short cycle. That means that the cycle would start maybe at the end of 24 or the beginning of 25. So this is, we could say, worst case. And therefore, your strategy could be, okay, let's prepare for the worst case. And therefore, I am taking out 25%. I'm selling 25% of my portfolio at the end of 24. Let's say we've had a 10x, or better, if you have a risky portfolio, you had a 20x, then a 25% is not a bad secure gain, right? Nobody can take this away. If you take it out at the end of 24, 25% before, that money is guaranteed, right? You're not going to lose it unless you put it back in again, right? And then you could say then, okay, so let's say we might have a normal cycle. So then you hold on to 75% of your portfolio, and then mid 25, this will be a normal cycle. A normal cycle would last till October 25, as I said earlier. That's a normal cycle, following the regular patterns. So if you cash out 50% before October 25, right? So that's before the election, whatever could happen then. If you cash out before that, that means mid-July, August, maybe September 25. If you cash out 50% there, now you have actually 75% that are secured gains. And then if you want to play, let's see how the year unfolds this year, and especially 25, what's going to happen, where the market is going to be. Hopefully there's going to be no black swan like last cycle where we had the pandemic, the corona pandemic. But then let's keep some. You can keep a third in, or you can keep 25% in till the end of 25 or mid 26, which is really what the people that believe in a super cycle, they think it's going to go all the way past 25. So a regular cycle would end October 25, but they believe a super cycle, because we have a larger inflows, it could go all the way into 2026. So you could keep a position, you could keep 25% or a third, and ride that out, because now you already took out, you were defensive, you took out in the possibility of a short cycle, you took out in the possibility of a normal cycle, and now you're playing with the rest, because now you're really in high risk territory, because we don't know where it's going to go. And then obviously what you also can do is you can take out, if you took out 75%, you can keep 50 in the bank, cash, stable coins, and then you can play around with 50%, or you can just play with the last 25%, and then let's see where is this bull run going to go? Is it a super cycle? And then what is going to happen? So you can decide what is your risk level again. Do you want to gamble with 25%? Then you have 70% secure. Or are you more rigid? You want to gamble with 50%. So you can put that 50% back in. If the cycle seems longer, and actually now we have proof it's going to be a super cycle, then you could put in, you have 50% maybe in stable coins and cash, you could put in that 50% again, and then just see how high you can go in the super cycle. So this is one strategy. I'm not saying that is the only one you should choose, but this gives you an idea of how you manage your risk again, because it's the same principle as regular investing. You are aggressive. During the bear market, you're accumulating aggressively. You're buying a lot of Solana at $8, and then when you get to the mid bull run, now you have to be defensive, because now we don't know when is the cycle going to end, right? What's going to happen, right? So that's when you go into defense, when you are mid bull market. That's usually where everybody else enters, and that's when you start to go defense, when everybody else is offense, right? When everybody's greedy, you should be fearful, right? That's the idea here. So that's one way of protecting yourself in your market. And then there are other. This is what's called the rainbow chart. This chart actually will tell you when we are overheated. There's a lot of different charts, charts and information you can look into, but there's a lot of ways to project when we believe that Bitcoin is going into red. And once the market is overheated, now that's when you need to be fearful. And that's when you need to have a defensive position, which means now you're starting to take profits. You can take 20%, 20%, 25 or more, but you do need to start playing defense once the market is going into euphoria. That's when we need to be fearful. So exit strategy. So if you're in the US, each country is different here, but you are now you are now under a legal penalty here, a criminal penalty. You now have to declare if you have bought or received digital assets, right? So it is something we need to figure out. You actually do need an accountant. If you're cashing out in the US, it's becoming more difficult, but you do need to consult with an accountant in order to figure out what is the right way. In most countries, you're only taxable when you sell your crypto. Not, you can actually swap. They might change that. I think there are new rules. They want to, even a swap is going to be taxable. But so far, right now in 2024, it is only when you sell in most countries. And so that is something to be aware about. Where do you want to sell? And then you need an accountant to help you with that exit, right? So again, let's go back to your goal. Your exit strategy is really dependent on your goal. What was your beginning goal? Is this your retirement? Do you want to leave money for your children through crypto, which is that would be a very profitable strategy, because if they've got another 10, 20 years before they reach adulthood and you are thinking of setting them up for good, 20 years of Bitcoin gains, that could be a very good strategy, I think. But you could also look at this as asset protection. That's what I personally do. I'm just getting out of a physical bricks and mortar business, which went through the first COVID. In Ontario, we had 3 lockdowns. My business was locked down by the government 3 times. So you can imagine how you get a little bit nervous about how are things going to go. So for me, I really see crypto, because it's very liquid and because you can have it, hold it in cold storage. You can have it in your hand, put it under your pillow or somewhere better. And the banks can't freeze it. They can't take it from you, right? Obviously, they're trying. There's a big battle against crypto because they don't like the people to be free. They like control, right? That is the idea of power. Why would you want power if it's not for the sake of power? And that means you want to tell other people what to do, right? So that's really what's happening here. So I actually, personally, I have a Danish passport as well as a Canadian passport, and I have accounts set up in Europe. One I could recommend here is called Revolut. They are a neobank and they're also a crypto exchange, but this is actually a very good, you can have a card, so you can have money that is actually taxable, and that's being reported in Europe, where I'm originally from. Denmark is not being reported to Canada. So you see there's a different requirement for the reporting requirement. That means I keep some things safe across the pond. And this is Revolut. It's a great app. You can actually put your cryptos straight into cash, and then you can spend your cash on your card here. So that would be one thing I recommend. Also, others are, the people that really make it big. If you really get hit it big, people are talking about going offshore. Dubai, set up a company in Dubai. You can go offshore. You can also go offshore you can do it in the US. Wyoming LLC can actually give you some privacy, and this is also something that I've been involved in that we can help you with as well. But you can also go more closely. You've got the Caribbean and some islands down here where you're actually able to go offshore. That might be another goal for you. I'm involved with I have a connection here, Bison Bank in Portugal. Which is a very good option where you can actually, the same principle again, you can cash out into cash. You can exchange your Bitcoin, Ethereum, they can go straight into cash, and then they can help you. Let's say if you want to cash out 2024, the most popular way is to buy real estate. So this bank will help your profits go into real estate, and you keep that for a couple of years and you sell it, and then now you have a clean cash here. But the market is changing. It's going to be easier and easier each year now that crypto has become mainstream. We're now in the regular market, regulated market. We've got EFTs. It's going to become easier and easier and easier. So this is something that's changing with time, but it's definitely something that we want to keep an eye on as well. Also, you could also just put it into your retirement plan. This is actually, there's some tax benefits to that. I'm not a tax expert, but if you put it into to your RSP or something like that, you actually have some tax benefits, and this can actually be a very good idea as well. Then you can also do what I'm doing personally, and this is kind of what I recommend if you want to invest for the long term. I'm already thinking ahead of taking my profits and then reinvesting them into the next bull run. So what you can see here is that we have the next halving. It's estimated in 2028. So we're in 2024 here, and we're going to have the halving here in April. We mid to end April should be when our halving for this bull run is going to happen. But then 4-year cycle, then that means the next halving is going to be in 2028. So if you take out your profits, keep it in cash or stable coins, and then sit on that dry powder for the next bull run. That way things are really gonna be interesting. So even let's say you're modest. I mean, personally, I'm going for 30 and 40x with parts of my portfolios, and some of our funds are aiming for 20 and 30x. 40x is possible. 20, 30x, 30x is probably, you know, you have to again be realistic. There are gains and losses with the market. But what you're able to do is, if you're taking your profits and putting it into the next bull run, 2028, you, let's just say conservatively, not too much risk, you're getting a 10x in this bull run. You take that cash and you keep it dry powder, stablecoin cash, and save it for the next bull run, meaning you're gonna accumulate. That's gonna be 26, 27. You're gonna accumulate as the market goes down, and then you're gonna hold on to that, and you're gonna take that and invest it into the next bull run, right out the next bull run. So let's just say another 10x. If you got 2 times 10x, you've got 100x, which means start with 10k, you got $1 million. Start with 100k, yes. Now you see where we're going. Now we're profiting from crypto, and that's really what this video has been all about. I hope you enjoyed it, and I look forward to hear from you. Questions answered. You can get a free consultation. We're happy to talk to you on how we can help you gain through crypto investments. Thank you.